In January, Calgary's housing market saw about 15% fewer home sales than this time last year. According to Calgary Real Estate Board data, the slowdown was most noticeable in condos and townhomes, where buyers were slower to return after the holidays. Calgary's condo market just posted its worst sales numbers in years, and the people watching this the closest aren't buyers or renters, they're investors, and right now, a lot of them are stepping back. In January 2026, according to the Calgary Real Estate Board, condo apartment prices dropped to around $312,000, nearly 8% lower than the same month last year. Days on market jumped to 42 days, up from 33 days a year ago. And inventory hit a record January high, more condo units sitting unsold than at any point in recent history. Here's the thing though, Calgary's economy is still growing. GDP is expected to hit about 2.6% growth this year, making it one of the top performing cities in Canada. So why are condo sales slowing down while the economy is still moving? Something changed. And that something came from Canada's banking regulator, OSFI. If you own a condo, rent one, or invest in one, you need to understand this. OSFI stands for the Office of the Superintendent of Financial Institutions. They're the people who tell banks how to lend money, how much risk they can take, and how mortgages are handled. Most people don't hear about them until something like this happens. In September 2025, OSFI finalized major changes to how banks treat investment property mortgages. These rules kicked in early 2026, and they changed the game for real estate investors, especially the ones who rely on rental income to qualify for multiple properties. Let me break it down simply. Before 2026, if you owned a rental property, you could use that rental income, say $2,000 a month, to boost your total income on paper. That made it easier to qualify for another property, then another, and another. This strategy was called recycling income. It's how a lot of small investors build portfolios, 2 properties, 3, sometimes more. But OSFI stepped in and said, not anymore. Their goal was simple. Income used for one mortgage cannot be reused for another. Clean rule, big impact. That strategy, basically dead. And there's a second piece. Under the new rules, loans are now classified as income-producing residential real estate, or IPRRE, if more than 50% of the income used to qualify comes from the rental itself. The loan is flagged as higher risk. That means banks have to be more careful. And when banks get careful, borrowers feel it. Higher rates, tougher approvals, same buyer, same income, but less borrowing power. Here's a real example floating around Calgary mortgage circles. Before these changes, an investor might qualify for a $750,000 mortgage. After the changes, that same person might only qualify for around $580,000. That's a $170,000 drop, just from how income is calculated. Now here's where it gets interesting. These rules don't hit every city the same way. And Calgary? We're right in the crosshairs. Why? Because Calgary is still relatively affordable and rental yields are strong. In expensive cities like Toronto, properties cost a lot more, so rental income usually doesn't make up over 50% of qualifying income. But in Calgary, it often does. Example, a $300,000 condo bringing in $2,400 a month. If the investor doesn't earn a huge salary, that rental income becomes the majority. Boom, IPRRE triggered. That means less borrowing power and no more stacking properties the old way. That's why investors started pulling back even before the rules officially kicked in. According to RE Max data, Calgary Condo resale sales dropped over 28% in 2025 compared to the year before. At the same time, inventory was rising, more listings, fewer buyers, and prices started to slide. By early 2026, benchmark condo prices dropped to around $298,600. That's about a 9% year-over-year decline. Supply climbed to about 4.6 months, the highest we've seen in a while. Now here's the part most people miss. This isn't just about buyers and sellers today, it's about what gets built tomorrow. Developers are paying attention, and right now, they're getting cautious. Instead of launching new condo projects, many are focusing on finishing what they already started. Some are shifting entirely to purpose-built rentals. Why? Because investors, the people who usually buy pre-construction condos, are pulling back. And without those pre-sales, developers can't secure financing. No pre-sales, no project. So they pivot. Rental buildings get more support and financing options. Condos, not so much right now. At the same time, rental supply is rising. Vacancy rates jumped from 1.4% to 4.8% in just 1 year. More rentals hitting the market, more competition for tenants, and that starts to slow rent growth. So is this good or bad? Depends on who you are. If you're renting, this is actually good news. More supply means landlords are offering incentives. Rents are stabilizing. You've got options again. If you're a first-time buyer, there's an opportunity here. Prices are down, inventory is up, sellers are more flexible, and with recent rate cuts, borrowing is more manageable. A household earning around $99,000 can access roughly a $425,000 mortgage. That's enough to get into the condo market. Now, if you're an investor, the game has changed. Not dead, just different. You can't rely on stacking properties using rental income anymore. Each deal has to stand on its own. More discipline, bigger down payments, less leverage. Honestly, not a bad thing long term, just tougher short term. Right now, Calgary's condo market is at a crossroads. The economy is strong, population is growing, demand isn't going anywhere, but the investor-driven boom from 2021 to 2024, that's slowing down fast. And these OSFI rules are a big reason why. Here's the long-term concern. If fewer condos get built today, we could face a supply crunch in a few years. Less supply, same demand. You already know what that does to prices. So whether you're renting, buying, or investing, one thing is clear. The rules of the game just changed. And this time, it wasn't quiet. Everyone is watching to see what will happen next. What do you think will happen?